All right, what is going on, everybody? Hope you guys are having the best day of your entire life. In this video, I'm going to break down how I lost $5,700 from my trading in about probably 35, 40 minutes. And the reason why I want to make this video is there's some psychological mindset mistakes that I made here, and I'm sure that some of you, if you watch this video and if you take notes, you can avoid these mistakes. And at the end of the day, man, that's the whole point of actually learning about how to trade is you learn from your mistakes and you learn from other people's mistakes. And once you actually grab those mistakes and try to analyze those mistakes that even other people have made, even you make, then you're able to come out with principles and rules and the stuff that you need to follow, and hence you start making money. For example, I'll give you an example. For example, is let's say school zones, like school zones. When you're driving, there's a school zone, and it could be, for example, let's say the speed limit of a school zone is 25 miles an hour, or 40 kilometers an hour, or whatever it is, right? How do you think this became a rule? Back in the day, probably, I'm just throwing a, don't quote me on this. Back in the day, probably, there was no speed limits for as such schools. Like if there's a school here, there was no speed limit as such. So people were going as fast as they, usually would be. And there was a kid probably crossing the road, and somebody didn't stop, and there was an accident. And then they're like, "Oh, this is happening too often. This happened 17 times this month, and this is too. This is bad. How can we control this?" They're like, "Okay, so let's make a rule that you can only drive at a certain kilometers per hour, certain miles per hour, and there's a speed limit. If there's a school, there's a speed limit now." Hence, that became a rule, but a lot of sacrifices had to be made in order to actually protect the future or the kids coming in future. Same concept goes in every single rule that you see across, like any single rule that you see government have, or any single rule that you see the society has in general. It's because of the past sacrifices that other people have to make, so that, like, even traffic lights, man, past sacrifices that other people have to make, and now you're like, okay, I need to follow this, even though sometimes it doesn't make sense. But past there has been some sacrifices have been made. Same goes in this trading world as well. They have to have some rules. They have to have some laws that you need to follow. Once you, at the end of the day, man, it's because of the sacrifices that a lot, like, you will make, or you learn from other people's mistakes, and hence you get some principles and some rules that you follow and you have to follow in order to actually get successful. So now let me break this down, the mistakes I made and the stuff that I did. Initially, first things first, let me show you the mindset that I was approaching on the day. Now, let's say, for example, you know how candlesticks, this is candlesticks, right? You know how candlesticks work. Like, this is candlesticks, this is support and resistance. This could be a strategy, pulling back and now buying towards the upside, whatever. Now, if you have a trading system has so many things that goes into place. For example, you need a strategy. You need a way to get in, way to get out. What's your stop loss? What's your profit target? All that. Okay. Third thing would be defining your A plus setup. Like, at what time, at what stage does this trade actually works for you the best? Which option contracts to choose? How to draw support and resistance levels? There's probably how much position size you meant to take. There's so many things that go into a trading system. Let's say I'm assuming that you have a trading system now. Okay, now you know how to trade. Like, I have a trading system now. Okay, I know how to trade. Now what happens is, for example, on this given day, I still have my system. Everything's good. But after a while, when you know how to trade, it's less about the system and it's more about your mindset. Okay, there comes a stage in your trading career where you are not trading the candlesticks, you're trading yourself. That means if you're feeling good, bro, doesn't matter if the market's choppy, you'll still be able to make money. And if you're feeling like shit or bad, doesn't matter how trendy the day is, you'll still lose money. And I'm sure this has happened to you in the past, where you were just feeling good, market was super choppy, everybody complaining about the market, super tough, but you just came out green that day. Everything was like perfect. Whereas there has been days when everybody around you is sprinting. You see on social media everybody making money, and you have lost on that day. It's about the mindset at the end of the day. You see what I'm saying? You are trading yourself in the market. At the end, after a certain while, you're not trading the candlesticks, you're trading yourself. You get my point? So my mindset approaching the day was, because there was, all right, for my Indian audience, man, happy Diwali. There was Diwali, and Diwali is the festival of lights, festival of colors, and it's like Christmas for us. Okay, I'm Indian. It's like Christmas for us, and it's a big deal for us. All right. And last year on Diwali, I was in India, and that was with my whole family in India. Everybody was there. My uncles, aunts, their cousins' kids. Oh my god, it was like everybody came, and we had to get together, right? And this year Diwali, I woke up, and I'm like, man, I had a shower. I'm like, it's Diwali today, man. I feel lonely. Miss my family because I saw some photos of them actually. They sent a photo. They're like, oh, we miss you. And I looked at him like, oh, man, I'm missing out. I mean, the FOMO was there, fear of missing out. Anyway, so I was feeling a little bit low. And also, me and my brother, we used to live together. So me and my brother, we used to live together in the same house. like we, bro, we love each other to a point where everything was beautiful. Now, I recently moved states. I'm now 1,000 miles or 1,700 kilometers away from him, because of some business stuff that we have running. So he had to stay because of some business interests that we had, while I moved to a different state because of new opportunities. And this was like 2 months ago. And this is the first Diwali in a long time that I'm alone. And I was just like, man, what? Right? So the mindset approaching the day was, I just didn't want to trade because my brain was not at working 100%. I was just feeling super low. Even now, I'm recording this. I'm in Australia, by the way. I'm recording this video. Check this out. Friday, 8 p.m. Market opens at about 11:30 for me here. And I was just like, man, I didn't want to trade. I was just not feeling the 100%. But you know what? I was like, you know what, man, I'll still trade. The reason why, because I'll keep it real. When you're running your Discord, when you're running your, you have a program, and you're running your mentorships, there's about a couple hundred people who are waiting for you to trade with them, and show them what trades are setting up and everything. So if you're not just trading just because you're not feeling the best, it's just a little thing in your brain where you're like, man, if I don't trade, these people are gonna be like, oh, why are you not trading? Da 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 da. There's some dramas, or there's, even if there's nobody ask a question, it's just like sometimes you're like, man, I need to suck it up. It is what it is. Like, I'll go trade. And that was a mindset that I had. I'm like, man, I don't want to trade, but I'll trade it because I don't want to, have people ask me, why didn't you trade? And we were waiting for you, da 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 da, all this. So I traded, right? Just keep it real. Let me show you the Discord message. So the Discord message that I sent in the morning was, my market opens 11:30 p.m. Okay, just now. Today I'm sitting here and I feel lonely as fuck. Last year on Diwali I was with my family in India. We had such a great time. This year I'm even away from my brother. But I think I have all you guys with me today. So first things first, happy Diwali. Now here's the thing though. Some people stay away from the goals for the family, while some people like me stay away from the family for the goals. There's different levels to the game. It will all be worth it, right? And I sent this message. I was just like, okay, that was my way of telling my brain, okay, it's all right. I still have a lot of people by my side, and it's cool. You see what I'm saying? I just want to keep it real with you guys. And that was a psychology. That was a mindset. My mindset was, I was feeling low. I was not feeling the best. Okay? Sweet. Now, let's jump to the charts, and let me show you the first trade that I took on the day. And the strategy, the stuff that actually why this trade works, and what's the psychology behind this trade, and all sort of their magic. Okay, so now this strategy, I like to call this strategy sucker strategy. Okay, what is a sucker strategy? So, like, you see this gap down, this after hours to the pre-market where the market opened. This gap down that you see, like, this is how the sucker strategy works. All right, suckers strategy. I know, hey, the name is, you try to catch the suckers. Suckers are people who do not know how to trade. All right, so what is sucker strategy? Sucker strategy simply means, how do I break this down? Like after hours, okay, wherever the price market closes, let's say it closes $100. Okay, this is after hours, not where the market closes, but after hours. And in the pre-market, if we gap down, say we opening at 99, and then what are we doing? As long as in the pre-market this trend hasn't failed, like in the pre-market action it hasn't done this, it's good. Okay, you see what I'm saying? As long as in the pre-market we still have the gap, a little gap there, this gap right here, yo, is one of the most important things for this strategy. This gap, and the gap hasn't been filled. This gap is super important. Okay, if the gap fills up to this point, now bigger the gap, better the strategy works. All right. So what happens is when the market gaps down, you know what a lot of suckers think? A lot of suckers think that the prices will keep on going down. Okay, and one of the most basic strategy that they use is the pre-market low. Okay, so after a gap down, so the first thing that you need is a gap up or gap down, whatever it is, from the after hours data, after hours and pre-market data. After that, you need to mark your pre-market high and low. So in this case, it will be pre-market low because we gap down towards the direction of the. If it gapped up, you mark the pre-market high. Towards if it gaps down, you mark the pre-market low. And third thing is you wait for the market to open, and when the market opens and it makes a candle like this, if it's able to reclaim within first 5 minutes, okay, that means first 5 minutes is when the strategy works of the market open. If we break below pre-market low and reclaims, you buy some calls with a stop loss right below this. Okay, you try to bet towards the upside. These are the 4 things that you need to pay attention to. Now, let me tell you why the strategy works. So think about it. There is a trader out there who has probably 10,000 shares and he shorted his 10,000 shares. Market capped down. It's opening at 98. Okay, it's a $2 move. And as soon as the market opens, he shorted this. Basically, shorting means you're selling first and you're buying later. So when you buy shares, that means you bought it here, you sold it here, you make the difference. When you sell first, you sell here and you buy back here, you make the difference. That's how trading works. It works on either side. All right. So this trader who bought 10,000 shares, the prices are down $2. He basically made 20 grand while he was sleeping. Now he woke up and he's like, oh my God, I'm up 20 grand. Sweet. Let me sell. Now, if you want to sell, let's say if you want to open up a restaurant, where would you open up a restaurant? Where like let's say Indian restaurant you want to open, where do you think there are best chances of having a successful Indian restaurant where people like Indian food or where people don't like Indian food? So let's say, for example, the suburb has a lot of Indian people, 90% of people actual Indian restaurant will do good. If there's 0% Indian, nobody likes Indian food, 0% Indian, there hasn't been any restaurant ever opened there, you're like, man, there's super less chances. That means you will want to sell your stuff where there are other people who are willing to buy the stuff. That's where it makes sense as a business owner, right? So same thing goes for this person as well, who is sitting there, who wants to get rid of his shares. Where would he sell or where would he close his position? Where other people are actually doing the dumb shit as well. What I mean by that, I don't want to confuse you too much. What I simply mean by that is, let me actually erase a little bit. There's too much going on here. All right. Sweet. Much better. Look at that. Much better. Okay. So what I basically mean by that is a lot of these people, the suckers, what they do is as soon as the pre-market low breaks, they short, thinking the prices will keep on going lower. For whatever reason, they're like, market super bearish, they short. Okay. Now these people they're already short. They need to get out of their trade. You see what I'm saying? That means these people need to sell their shares. Now, these people don't own any shares. But they need to sell. And these people need to buy back their shares. Does it make sense? Why? Because they sold the shares already. That's how selling works. They sold the shares already. In order to close those shares, they have to buy those 10,000 shares back. And these people want to sell their shares because they want to go short. But who do you sell it to? Somebody who want to buy, right? So these people are like, okay, let me see where the most amount of buyers will come. And they're like, okay, if the pre-market low breaks, that's where a lot of people will try to short. All these suckers will try to short. I'll sell it. I'll literally, I'll buy those shares from them, or just keeping it real, I'll take their shares and I'll get out of my position. But basically, these people, these suckers, are paying for this person's holiday. I don't know if I'm confusing you too much. Basically, you want to catch the suckers, where suckers are jumping in, smart money is getting out. That's all, right? Now, what you want to do is, you don't want to just jump in calls the moment pre-market low breaks. You want to wait for because all these people, guess what? Where they have the stop loss. Everybody have a stop loss in the market. Where do suckers put their stop loss? Suckers are like, okay, I'm shorting at the moment pre-market low breaks. I'll put a stop loss just now. I'm in the trade. I'm shorting. I'll put a stop loss just above the pre-market low. Okay. Now what happens when the stop loss gets triggered? They sold the shares. When the stop loss gets triggered, the order comes into the market to close a position. You sold something first. Now to close it, you need to buy it back, right? Because you sold 100 shares. Now to close it, that means you need to buy 100 back, so it becomes 0. All these orders are coming into the market as buy orders. Okay, the moment your stop loss gets triggered, these orders come into the market as buy orders, and hence we start seeing big moves towards the upside. All right, that's the basic concept behind sucker strategy. If I'm not able to break this down, I'm sorry, man. But that's how the sucker strategy works. If you don't understand, too bad. Just go back to the video and try to watch this bit again. So that's called sucker strategy. Okay, and that's, you basically want to catch the suckers, and that's exactly what I did on SPY. All right, market gap down. Look at this. What did I say? Market gapping down. So the market gap down right here. You see this? There's no data. Market gap down. I marked the pre-market low. The market's about to open. All right. I wait for the. I waited for the pre-market low to break. Pre-market low broke. I'm like, okay, if we can reclaim this pre-market low, I'm gonna go long. All right. I'm sitting there, pre-market low, and bam, we started bouncing. Now the mistake that I made here is I didn't pay attention to a while that, like I just said, this strategy works the best within first 5 minutes. And if I go on a 5-minute chart, you will see this. Within first 5 minutes, check this out. This is the first 5-minute candle. We were not able to get above this. It has to work within first 5 minutes. The mistake that I made was maybe just because I was not seeing things clearly, because the mindset that I was in, it works within first 5 minutes. That's a mistake I made. So within first 5 minutes, like this is a 2-minute candle, right? 2, 4, 6 minutes. 6 minutes in, we haven't actually reclaimed the pre-market low. So that's a mistake I made. So now I'll start writing my mistakes down. Okay. Let's say the first mistake I made, didn't wait for my rule. Right now, if you have a rule for a strategy and you need to follow it, I to be personally very honest with you, man, I actually forgot about this rule because there was just so much things going on in my brain about my personal stuff. I forgot about this rule. Now this trade worked for a little bit. It pushed up, right? It pushed up, and I jumped in on this particular candle. Now I'm like 3 minutes late, or 5 minutes late, and I jumped in. As I said, it works only for 5 minutes. That's a mistake number one, right? And I was up like 10% or whatever it is. It was like, it paid a little bit. I didn't take profits because I was like, it might go up a little bit even further. Stop loss is simply just sitting below this, actually low of the day or whatever it is, right? The mistake doesn't matter where the stop loss is for this, because the reason is because I didn't follow my first simple rule that I have for the strategy. Works the best within first 5 minutes. Now, it doesn't matter the stop loss. This is a mistake. Doesn't matter how this trade goes and didn't go. By the way, I took a loss on this trade, but that's different story. You see what I'm saying? The first thing was there was never an entry. There was never an entry. You see what I'm saying? There was never an entry. The strategy works within first 5 minutes, and within first 5 minutes, it didn't give me the entry, and I should not have taken after first 5 minutes just because I wanted to take the trade. That's a mistake I made. All right. Now you might be wondering, why am I on a 2-minute chart? So I'm sure that you have watched some of my videos. You will already know I watch different time frames for different times of the day. Okay. So first things, I watch 2-minute chart from 9:30 Eastern time to 10 o'clock Eastern time. All right. First 30 minutes of the market open, I watch just 2-minute charts by itself. I watch 5-minute chart from 10 Eastern to 11 Eastern. okay, New York time. 5 minute chart, just 5 minute charts by itself. And then I watch 10 minute chart. This is my system, all right? 11 Eastern to basically about 3 p.m. And 3 p.m. to 4 p.m., the last 1 hour, I don't try to trade. I don't like trading it. There's too much going on. There's so much volume. There's so much volatility for no reason. My strategies, I've tested and back tested this enough. My strategies do not really, really work. My system doesn't really work in the last 1 hour. So I try to just literally, if I'm trading, I'll finish off my day strictly at 3 p.m. Even if I have a position open, I'll just close it and I'll walk away. All right. 2 minute, 5 minute, 10 minute. Please take a screenshot of this. This is important. Don't keep watching one time frame whole. I've done that mistake in the past. If you're new, if you already have a system, do what you want. If you're new, please have different time frames for different times of the day. It will pay well. Okay, this is what works for me. It might not work for you, but I can only share what works for me. Okay. All right. Now time frames are done. Go back to this SPY trade. As I said, I wrecked up here a little bit, played up. Now, there's another framework that I use. In every single thing I use frameworks, man. There's another framework that I use. I think more than me breaking down my trades, what's actually you're going to learn more from is the frameworks that I have. And I didn't, me not respecting my frameworks because of I'm not actually in the right mindset. That's where I made mistakes. I didn't make too many mistakes in, the trades as such. I made mistakes in my not following my own frameworks. There's another framework that I call bell curve framework. Okay, what's bell curve? This is bell curve. Yeah. So this is bell curve. That means time of the day and size, position size. I usually start my day super small. So the first trade always is super small. So even this SPY trade that I took, it was small position size. Now, small is subjective for a lot of people. For me, small might be $3,000 position size. For you, small might be just doing 2 contracts and $400 position size. You see what I'm saying? So don't take this as like, oh, 3,000, I should do big position size as well. No, whatever you think is small position size, you do that. So the first trade for me was small position size. Usually, if my first trade of the day is green, my next position size is a little bit more than the first one. If that trade is green, it's more. Let's say if second trade is red on the day, if the second trade is, the trade goes south, it didn't work, next position size is either same or less. I straight away start coming down like this, up until I have my green trade, and then I pick it back up again. That makes sense? That's how my trading works. This has paid off really, really well. So I'll start off the day super small, and if I'm green, I'll keep on printing, and then after I take a loss, I'll start just scaling down. But today, the mistake I made was after my first trade, I should have either kept my position size same or should have gone down. Next trade that I took, I kept my position size moving up a little bit. You see what I'm saying? That's a mistake I made. So I started following the position bell curve, thinking that my first trade is already green, even though my first trade was red on the day. The first trade was red. The second trade worked. Okay, I'll show you the trade that I took. It worked beautiful, but I should not have done it, because now any money that you make without being disciplined in the market is eventually going to go back to the market, be it today, be it 6 months from now. I'll say one more time. Any money that you make in the market without being disciplined is eventually going to go back into the market, be it today, be it 6 months from now. So now I made a little bit of money on the second trade that I took. I was watching this NVIDIA, and I'll show you. Like, look at this. The trend picked up. NVIDIA trend picked up towards the downside. I'm just like, oh la la, looks nice. Let's see if we get a little pullback. It picked up nice. Look at this. So beautiful trend. I just wanted to see a little bit of a pullback. And then finally, I started seeing a tiny bit of a pullback. Like, you see these candles. At one stage, this particular candle was green candle. You see this wick? So what does this wick actually mean? This wick means when this candle opened, it started going up, and it looked like this at one stage. And towards the end, sellers came and they pushed the price down, and it closed like this. Now, all these wicks that you see, this means it tried to pull back, but sellers are able to take over. They're not letting it push further. I looked at this. I'm like, this looks nice. This looks really, really good. Everything looks good about this. There was the structure that I was following was this. All I thought was that there is a little pullback that happened. If you break and made a new low of the day, it might go down. Now you might be like, but pullback needs to be different color. It doesn't have to be different color. It's just like a micro pullback. And that was a trade that I was watching. It's just like, bro, at this stage, these are advanced concepts. You see what I'm saying? This is not beginner concept. This is a little bit of advanced concept. I saw that little pullback is happening. The pullback can be of different color. Pullback can be of the same color candlesticks. And I saw last 2 or 4 minutes on 2-minute chart have been super slow. If it breaks below low of the day, it can make a leg down. That's what I was watching. And next candle, it made a low of the day. I jumped in puts. That's simple trade that I took. And by the time it actually went down, we started taking profits because it was just such a nice move, bro. This is a dollar move. And look at this. This is like a dollar move. And I was watching this 132.3 level. I started taking profits. And look at this. Such a nice, I started taking profits and I was like, man, this is nice. I'm done. I'm out. I think I made 30%. And as I said before, my position size went up a little bit. I made my loss back that I had on SPY. But the mistake I made here was after a loss, position size should be small. You know who puts the position size big after a loss? People who do not know how to trade. And that's why they keep losing. They move their position size up because they want to make their money back. I should not have done it. I was like, man, what am I doing? I made the money back. Yeah, I made the money back. But now I'm like half wrecked for the day. I'm not wrecked, but a little bit not following my rules. Somewhere in the back of my mind, I'm like, man, I should not have done it. Even while I jumped in the trade, I'm like, man, I should not have done it. So I started taking profits. I started just like, I knew that I made a mistake. I'm like, oh man, I should not have done it. But now it's too late. I did it. So it is what it is. And at the same time, while I actually took this trade on Nvidia, I took a trade on Tesla as well. I'll show you the trade on Tesla. So Tesla trade was super, super simple, man. Tesla was already coming down. Tesla was already weak. Look at this. Boom. What's happening here? It's below pre-market low. You see this below pre-market low. It's below yesterday's low. For me, that counts as an A+ setup. Right? My A+ setup, if you're going to ask me what's your A+ setup, Somesh, my A+ setup is when the price action is below or above, could be below or above, pre-market high or low, okay, plus yesterday high or low. For me, that becomes like, okay, that's super trendy. That's how I look at it, and that's my A+ setup. Man, I just feel, even now I'm breaking this stuff down, I feel like I'm not able to break it down properly. Please let me know in the comments if you're enjoying it. Just say, bro, 30 minutes in, I already like this. Thank you so much for me. I don't know. It's just hard sometimes breaking down the concept. Anyway, I was watching this and I entered roughly around here because I started seeing, okay, I'm like, this is a flag forming right here. This is a flag pattern forming. And also we might be making Fibonacci. I drew the Fibonacci point. I'm like, we are also holding 0.236, hasn't been able to break beyond 0.236. And this concept, Fibonacci's, you basically want to draw your Fibonacci's from where the trend started to where it started pulling back. And these are the settings that I have, okay? Just make sure your settings are exactly the same. All right? And make sure the numbers are exactly the same. Super important. All right? Anyway, so this is what I had on my chart. And I'm like, okay, so now I'll break it down really quick. So if your Fibonacci, say all these, you see this 0.78 or whatever, I'll break down two levels that are super important. All right. So if there's 0 to 1, you have 0.236, you have 0.382, You have other ones 0.5, 0.7, whatever, 0.68, whatever one it is, and whatever, right? To me personally, man, only levels that I respect are these two. Everything else, all this, you see, it's too much on a downtrend. Okay, so if a downtrend picks up, let's say a downtrend is coming up, the strongest names, write this down. The strongest names will get rejected at, what is it? The strongest names will get rejected, and make sure you're taking notes, man. Why you even watching this? Go watch Breaking Bad if you don't want to take notes. Maybe you'll enjoy. Take some notes. The strongest names will get rejected at 0.236. The strong names will get rejected here. This is strong. And after this is just like a slow mover. This is to a point slow that I don't want to trade it. So I only like to trade these two. So if the price is holding from this point to anywhere up until it touches 0.5, for me that is a green flag straight away. I just look at it like, okay, this is a green flag, this is nice. I like this. All right, same thing here. I'm like, okay, we are holding from this point to my haven't touched 0.5. We are holding strong in the strongest zone, and it looks like a flag. If it breaks below the flag, I'm gonna go short, and I shot it at the same time while I jumped in Nvidia, and it worked beautiful. It paid off a little bit, and then I didn't take profits because I was expecting a big move, and 10 o'clock happened. As soon as 10 o'clock hits, I usually switch the time frame. So I went on a 5-minute chart. I'm like, okay, 5-minute chart started bouncing. My stop loss is just literally this Fibonacci level, let's say. It bounced and it hit my stop loss and I got out. This is a mistake that I made. Could I have avoided this? Yes, probably. The reason why I could have avoided this is super simple maths. I was already jumping in Nvidia. I liked Nvidia more than Tesla at this stage. I just came back from a losing trade. Look at this. I just came back from a losing trade on SPY. I'm already doing bigger position size on my Nvidia trade. And now at the same time, I'm also jumping in Tesla. Basically, I'm breaking the rules, 2 or 3 rules here. One, after a loss, you need to calm down. Take it easy. Now I'm actually going nuts. I'm going nuts with Nvidia trade. I'm going nuts with Tesla trade. I already have a big position size on Nvidia because of the fuck up that I did, that I explained before. Now I'm picking up a little bit of Tesla as well. Man, it's about the risk exposure. It's about the risk exposure that I have. You see what I'm saying? I should have just taken one trade, either Nvidia or Tesla. And because I was just coming back from a loss, just take it easy and relax, right? But I did the opposite. Nvidia trade worked beautifully. Tesla trade didn't work. I think I lost like 15% because I didn't take profits. It started bouncing and it hit my stop loss and I jumped out, whatever. I could have avoided this. This was a mistake that I made, right? And then this, again, now I'm on a 5-minute chart. So now the third rule that I have, this is, oh my God, I actually follow this rule because I've got hurt so many times. Doesn't matter what's happening in the market, it doesn't matter how my emotional senses, doesn't matter how bad I'm actually fucking trading or what. I have had so many losses because of this one simple rule, and the one simple rule is 3 red trades in a row, walk away. I walk away if I have 3 red trades in a row. I do not stay. If I had 3 red trades in a row, consecutive red, I don't even look for the 4th setup. Because in the past, I've done this mistake. When you're down on the day, man, when you're being red on the day, when you're in a red streak, every single setup looks like an A+ setup. Every single setup looks like A+ setup. It's like I don't know what exactly the word is, but it's like you in the desert and you see further away, you're like, oh, that's the water. Oh my God, that's water. You go there and it's actually not a water. It's just like your brain, playing tricks. Same stuff. When you're red on the day, every single trade will look like an A+ setup. Oh my God, this has to be the one. If you take that, you're going to be down again, again. And I has done these mistakes to a point where I will never do this. I had first trade on the day, SPY, which was red. Second trade, Nvidia, was green. Third trade on Tesla was red. Now I was about to take... Now, look, I had one streak already. I took this AMD trade. Okay, AMD looked beautiful. Look at this. AMD looked beautiful, yo. At this stage, I was looking at AMD. I'm like, man, AMD looks so nice. The trend is super weak. Now, in this particular trade, I didn't make any mistake. Now, there's two different type of losses in the market. All right, one loss where the market, like, look at this, two different type of losses, loss and loss. One where you can learn something from it. Okay, you can learn like, oh, I made an emotional mistake. I should have kept my runners running. I should have respected my stop loss. Second one is RL. What is RL losses? RL losses are where where you couldn't do anything better. You did everything best. It's just a trade that didn't work. For example, if a strategy has 80% win rate, that means there's going to be 20% chances that the trade's not going to work, right? That means out of 100 trades that you take, 80 trades going to be green, but there's still going to be 20 trades that are going to be red. And this loss, if it's a RL loss, is just a part of that. So not every loss is trying to teach you a lesson. If you try to learn a lesson from this loss, you're going to scratch your head and be like, man, I shouldn't, like, why did I even take this trade? Or you're going to be confused. You're going to text me. You're going to be like, hey, man, what did I do wrong? Not every single loss is out there to teach you a lesson. So just look at the trade, and this is the trade that I took on AMD. This was just, it is what it is. I looked at this, and I'm like, okay, this is a hourly level that I have. We broke below the hourly level. Okay, this is hourly level. Hourly level means just a support and resistance line that I made on an hourly chart. I broke below. It went back to retest this. Sweet. And in my brain, I'm like, okay, this kind of looks like a flag. It went back and retested this. Let me see Fibonacci. Now I'm looking for confluences. I'm like, okay, confluence is when there's more than one reason for you to jump into a trade. So my first reason is Fibonacci. Second reason is break and retest of a critical hourly level. Third reason is a flag type thing forming. I'm just like, man, this looks good. The volume is low on the green candles. Red candle have more volume. That means momentum is there. Everything's good. I went short with a stop loss just above this particular Fibonacci level. Initially worked a little bit. Stop loss is on the other side. I did everything right, and it went back and hit my stop loss. What did I do wrong here? Nothing. If I would not have respected my stop loss, look at this. Look at this. What happened? It went from 144.5, bro. If I would have not respected my stop loss, I cut my trade straight away, like literally. So it's super important. Please take a note of this. It's super important that you cut your loss. And this AMD trade, I did nothing wrong. It is what it is. The trade just didn't work. Okay. Then comes Tesla. Kind of a similar thing that I did here. I could have avoided this. The reason why is the stuff that I'm gonna go over. It's you need to please pay attention to this. This is important. I teach this stuff inside my program. Every stock has a nature, okay? And nature, what does a nature means? Every person has a nature. Like you have a nature the way you react to different things differently. I have a nature where I react to different things differently. On some days, let's say if somebody, on some days if I broke, or if somebody I see breaks a plate in the kitchen, I react different. On days when I'm just like not in the mood and somebody breaks a plate in the kitchen, like let's say my chef breaks a plate, I'm just like, man, just open your eyes. I react a little bit different. Just an example. I don't do it. It's just an example. There's some days where you react to the same thing different because you're in a good mood. Some days you react different because you're in a bad mood. Same goes for trading as well. Every single day, stocks have a nature, okay? And the nature usually gets divided into two parts. Good or bad. Okay, good means everything's clean. Bad is called being deceitful. So deceitful means it will try to hurt you. It's just you can't trust it. All right. Now, how do I define deceitful? If I have taken a trade on the day, like I took a trade on Tesla that didn't work earlier. Remember the Tesla trade that I took that didn't work earlier. And I did everything right. I marked that trade straight away as, or that stock as, I did everything right. There was nothing that I could have done different. This is deceitful. Tesla is deceitful. On deceitful, that means if once I have taken the loss on the name, I'll try to be very careful or very picky to trade this name again. It's just deceitful. It's not in a good mood. It's just like you not trying to piss somebody else, somebody more, like, somebody's in a bad mood and you're like, man, don't worry about it. I want to ask him this question, but nah, don't worry about it. He's not he's not in the best mood. I'll ask when he's in a good mood, because how the reaction changes when you're in a bad mood and in a good mood. So if the stock, I know it's in a bad mood, I'll try to just be super picky or just try to avoid it at all for taking another trade. This is the mistake. It's called deceitful nature of the day for the stock. And Tesla already had a deceitful nature, right? Tesla already had a deceitful nature because earlier in the day, everything was done beautifully. I took a trade and then it went down after stopping me out, whatever. And now the mistake I made was I was looking at this and I was looking at this earlier in the day. It kind of hurt me a little bit right here, I think. I was looking at this. I'm like, okay, we are still holding this Fibonacci. We're getting kind of rejected of this 8 exponential moving average. Let me just go short here. Stop loss can be on the other side of this particular candle. This is the mindset that I kind of had, but it was being deceitful. That means I can't really trust this right now. That's all I need to break this down for you. Okay, when there's something is being deceitful, you can't trust it for that day. I should not have trusted it. This is a mistake I made. Now you might be like, man, I didn't even know there's a thing called like that. Yeah, there's a lot of things that you do not know what you do not know. And I went short. My stop loss on the other side of this particular candle, and my stop loss got triggered. I jumped out. Straight away. I'm like, no problem. It is what it is. Now look at this. AMD trade was red. Tesla trade was red. SPY trade, I made a mistake because the first 5 minutes I didn't respect. Nvidia trade, I made a mistake because my position size wasn't fucking right. Tesla, this could have been awarded because I should not have taken this trade because I'm already in Nvidia and I'm coming back from a red trade. AMD, there's nothing wrong with this trade. Everything was good. Tesla, it was already deceitful on the day. I should have avoided it. Now, 3 red trades in a row. Doesn't matter how emotional I am, man. 1, 2, 3. 3 red trades in a row. I call it a day. I walk away. I close my broker faster than anything. I just like, bang, done. I know for a fact, even if I keep the broker open for extra 1 minute, there's something my brain's gonna, the shiny object syndrome, my brain's gonna start playing games where I'm gonna just do something which I don't want to do. And this rule has saved me so much money over the years. But it's not easy to jump on here and try to make a video about this is how I lost and all the mistakes in detail, the way I'm breaking this down for you. I just don't want any of you to go out and make these mistakes. That's the whole concept of me breaking this down. So, 5 trades that I took, some lessons that I could have avoided this, but yes, it is what it is. And I hope you enjoyed this stuff. I hope there was something that you learned which was valuable. Now, if you wanna, there's probably a playlist on this side, maybe somewhere around here. There's a playlist where there's more trade breakdowns. If you want to learn from me one-on-one as mentorships, join my mentorships. There'll be a link right here. And make sure you subscribe to the channel, man. Like the video. It doesn't hurt you much because why not? It helps the channel, I think. So subscribe to the channel, like the video, and so I know. I don't like videos, by the way. If I'm watching a video, man, I don't like videos. I don't press the like button. But now I know when they ask like the video because it maybe helps the channel. Just like the video. Sweet. Let me know in the comments that you watched till the end. I'm out. Please subscribe to the channel and see you later. Peace.